Imagine walking into a negotiation where the other side knows exactly every detail of your financial life, has the legal authority to freeze your bank accounts, and holds the power to dictate the terms of your surrender. For most people, this is exactly what it feels like to owe the IRS back taxes. It feels less like a negotiation and more like an impending financial execution. But what if you walked into the same room armed with a blueprint? What if you understood that the IRS isn't actually interested in destroying your livelihood, but is instead bound by a strict set of procedural rules? What if you knew exactly which levers to pull to pause collections, reduce penalties, and structure a settlement that protects your cash flow? When business owners and high income professionals face significant tax debt, they often panic. They make impulsive decisions. They drain retirement accounts, max out high interest credit cards, or agree to impossible monthly payments just to make the threatening letters stop. These reactive strategies almost always create more long term damage than the tax debt itself. The truth is, resolving back taxes is not about finding a magic loophole. It's about applying strategic procedural pressure to the IRS system. It's about knowing the difference between an installment agreement, currently not collectible status, and an offer in compromise, and deploying the right tool at the exact right time. And that's what we're unpacking today. Hello, I'm Jovi Shari Brown, and welcome to the Sweet Spot Tax Podcast. In each episode, we take a deep dive into a Georgia Peach income tax sweet spot source document written by me. Guided by brief musical transitions, we'll explore 5 key areas: the deep dive, the psychology behind it, the sweet spot shift, actionable takeaways, and the clarity check. Along the way, we'll expand on the source document and explore the ideas, strategy, and questions behind it. Our goal is simple: to take complex topics and break them down into clear, practical ideas that are easy to understand and apply. Whether the topic is tax strategy, business growth, financial clarity, navigating IRS challenges, or decision making, the objective remains the same: to help you think more clearly and move more intentionally. Let's align with your sweet spot and begin today's deep dive. Let's dive into this. When you owe the IRS, the worst strategy is hope. The best strategy is a structured plan. The IRS offers several formal resolution pathways, but choosing the right one requires a cold, objective analysis of your financial reality. The most common strategy is the installment agreement. If you owe less than $50,000 and can pay it off within 72 months, the IRS offers a streamlined process. You don't have to disclose your entire financial life. You simply agree to a monthly auto draft. For balances over $50,000, the process becomes more invasive, requiring a full financial disclosure via Form 433. The critical strategy here is negotiating a payment you can actually afford, rather than agreeing to a number out of fear that will ultimately cause you to default. If your financial situation is more dire, the strategy shifts to currently not collectible or CNC status. That is a powerful defensive move. If you can prove that paying the IRS would prevent you from covering basic allowable living expenses like housing, food, and transportation, the IRS will halt collection activities. They won't levy your bank account or garnish your wages. The debt remains and interest continues to accrue. But CNC status buys you the most valuable asset in a crisis: time. Time to restructure your business, increase your income, or prepare for a more permanent solution. Then there is the offer and compromise, or OIC. This is the strategy everyone wants, or at least it's very popular, but few actually qualify for it. An OIC allows you to settle your tax debt for less than the full amount owed. However, the IRS uses a strict mathematical formula called reasonable collection potential. They calculate the quick sale value of your assets plus your disposable income projected over a specified period of time. If that number is less than what you owe, they may accept the offer. The strategy here is precision. A poorly prepared OIC will be rejected, and the information you provided can be used in collection against you. Another highly specific strategy is innocent spouse relief. If your tax debt is the result of your spouse or former spouse improperly reporting income or claiming false deductions without your knowledge, you can petition the IRS to be relieved of joint liability. This requires proving that you had no reason to know about the errors and that it would be unfair to hold you responsible. Finally, there is penalty abatement. The IRS assesses massive penalties for failing to file and failing to pay. If you have a clean compliance history for the previous 3 years, you can request a first time penalty abatement. If you don't qualify for that, you can argue reasonable cause, proving that a significant life event like a natural disaster, severe illness, or unavoidable financial hardship prevented you from complying. The mechanics of these strategies are public record. The reason they fail is almost always psychological. So, what's the psychology behind it? When individuals face overwhelming debt, their cognitive processing fundamentally changes. Neuroscientists refer to this as the scarcity mindset. When you are focused with an immediate threatening scarcity, in this case, a lack of money to pay the IRS, your brain narrows its focus. It creates a tunnel vision that prioritizes short term survival over long term strategy. This is why a brilliant business owner might irrationally liquidate a protected 401k to pay a tax bill, incurring massive early withdrawal penalties and creating a new tax problem for the following year, just to relieve the immediate psychological pressure of the IRS notice. This scarcity mindset also triggers decision fatigue. Dealing with the IRS requires gathering years of financial documents, filling out complex forms, and engaging in bureaucratic phone calls. A brain already exhausted by the stress of the debt simply lacks the executive function required to execute these tasks. So the taxpayer defaults to inaction, which the IRS interprets as noncompliance, leading to harsher collection actions. Furthermore, there is the issue of ego depletion. High achieving professionals are used to being in control. Having to submit a Form 433 to the IRS detailing every dollar you spend on groceries, housing, and transportation feels deeply humiliating. The ego resists this submission, causing the taxpayer to delay the process or provide incomplete information, sabotaging their own resolution strategy. To successfully navigate back taxes, you must bypass the amygdala's fear response and engage the prefrontal cortex, the area of the brain responsible for logical planning and impulse control. You must separate your self worth from your balance sheet. We'll continue our discussion in a moment. First, a brief word from Georgia Peach Income Tax.
Financial success creates opportunity, but it also creates complexity. Tax decisions affect more than forms. They affect your cash flow, your business, your peace of mind, and your long term financial future. That's why the Sweet Spot Tax podcast is powered by Georgia Peach Income Tax, strategic tax advisory, and IRS representation built for clarity. Whether you're planning ahead, facing an IRS notice, dealing with back taxes, organizing your business, or seeking a clearer path forward, Georgia Peach Income Tax helps you move from stress to strategy and from uncertainty to clarity. Visit www.georgiapeachtax.com to access tax calculators, educational resources, IRS tools, AI assisted insights, and practical guidance designed to help you make smarter financial decisions before money moves. If you're looking for strategic tax advisory, IRS representation, or personalized support, call 229 395 3625. And if you'd like ongoing education, tax insights, live discussions, and access to everything from free resources to premium and VIP tax strategy experiences, join the Sweet Spot Tax community on school because the goal isn't simply filing a tax return. The goal is making better financial decisions with confidence. Visit www.georgiapeachtax.com, call 229-395-3625, or join the Sweet Spot Tax community on School Today. Georgia Peach Income Tax, protection, strategy, financial clarity.
Most people believe that resolving back taxes is about finding a way to pay the IRS. The real strategy is about protecting your financial ecosystem while satisfying the legal requirement. That's the sweet spot shift. When you operate from fear, your goal is simply to make the IRS go away. You sacrifice your working capital, your savings, and your business growth to appease the immediate threat. The shift happens when you approach tax resolution as a structural reorganization. You are not begging for mercy. You are utilizing legal frameworks to stabilize your finances. If you use an installment agreement, you are strategically managing cash flow. If you utilize currently not collectible status, you are executing a calculated pause to rebuild capital. If you pursue an offer and compromise, you are engaging in a highly structured financial settlement. This mindset shifts from a victim of circumstance to an architect of your recovery. You stop asking, how can I survive this? And start asking, what is the most mathematically efficient way to resolve this liability while preserving my ability to generate future wealth? This is the essence of strategic tax positioning applied to debt resolution. If today's discussion resonates with you, here are 4 practical actions you can take immediately. Number 1, stop the bleeding. Before you can negotiate back taxes, you must be current on your present obligations. Ensure all required tax returns are filed and that your current withholding or estimated tax payments are correct. The IRS will not negotiate a resolution if you are actively creating new debt. Number 2, never use protected assets to pay unprotected debt. Before you liquidate a 401k, take out a second mortgage, or max out credit cards to pay the IRS, consult a professional. The IRS has specific rules about what assets they can and cannot touch. Do not voluntarily surrender wealth that the law protects. Number 3, request a collection hold. If you need to gather documents or hire a professional, you can often call the IRS and request a 30 to 60-day hold on collection activities. This stops the immediate threat of levies while you build your strategy. Number 4, hire a tax resolution specialist. Do not attempt an offer and compromise or a complex installment agreement on your own. An enrolled agent or tax attorney knows the allowable expense standards, the procedural loopholes, and the negotiation tactics required to secure the best outcome. They are the architects of your blueprint. We've spent today's episode discussing installment agreements, offers and compromise, and psychological impact of the scarcity mindset. But perhaps the bigger lesson isn't about tax resolution strategies. Perhaps it's about the resilience of your financial identity. A massive tax bill can feel like a referendum on your success. It can make you question your competence, your business model, your future. But a tax debt is not a character flaw. It is a mathematical imbalance. Strategic people understand that crises are inevitable in the pursuit of wealth. The difference between those who recover and those who are destroyed is not the absence of mistakes. It is the presence of a system. When you approach IRS debt with a blueprint rather than a panic button, you reclaim your agency. You demonstrate that you are capable of facing the most intimidating financial adversary and navigating the process with discipline and intelligence. The IRS is a machine. It responds to forms, formulas, and procedural deadlines. When you understand the machine, you stop fearing it. You simply operate it. Think about that. And ask yourself, am I letting fear dictate my financial decisions? Or am I using strategy to protect my wealth and build a stronger foundation for the future? That's today's clarity check. Thank you for listening to the Sweet Spot Tax Podcast. For more tools, resources, and strategic insights, visit www.georgiapeachtax.com. Join the Sweet Spot Tax community on School or call 229 395 3625. Again, visit www.georgiapeachtax.com, join the Sweet Spot Tax community on School, or call 229 395 3625. Whether you're looking for tax strategy, IRS representation, or greater financial clarity, we're here to help. Georgia Peach Income Tax: Protection, Strategy, Financial Clarity. Until next time, align with your sweet spot and move with clarity.